Okay, folks, welcome. We're going to get started in a few seconds, so please take a seat. Plenty of seats still up front. Grab your favorite breakfast drink or lunch or dinner and find a comfortable chair because we're ready to launch into some new material this time in our webinar. Give us a few more seconds. Okay, welcome to our weekly update broadcast. It's June 25th, 2020, and it's another beautiful day. You guys need to get out there. You are attending the Preparing for COVID-19 Recovery Loan Options and Forgiveness Strategies webinar, and yes, we've been doing this for almost 3 months. I think our first webinar was on April 1st, and this is June 25th. It's been a wonderful time together. And yes, we are powered by, this webinar is powered by SACS. SACS, the Accounting, Tax, and Advisory Service, SACS Wealth Advisors, and S2 Solutions. Those are the 3 different partners that we are together, and we all do a little bit different, but we all work as advisors, as those people who are partnering with you. So that's who's bringing you this webinar. And the good news is that we have to give you the bad news, which is that you really need to know that what we're doing here is we're providing you with general guidance only. So this does not constitute the provision of legal advice, tax advice, accounting services, investment advice, or professional consulting of any kind. What that means, folks, is that you need to take any specific questions that relate to your pertinent facts to your professional advisor. And of course, if we are your professional advisor, we're going to take those questions. And if we're not, and if you're looking for someone, we're here for you. So let's talk about CPE. Some of you are attending because you love us, and some because you love us and you also want to get some CPE. So if you do want to get the CPE, we need to tell you the rules. First, the rules is for you to show up. And of course, you've done that. But by showing up, if you leave us during the webinar, then you will not be entitled to CPE. And yes, we do track you down. We do know who is watching this and who is participating, because the second thing is that you need to answer the polling questions. Now, the good news is that you don't have to answer all of them. You just have to answer 3 out of the 4 polling questions. And also the good news is you don't have to get the question right. And the third thing you need to do is at the end of the webinar, you need to fill out the participant evaluation sheet, which if you look at your screen, you're going to see it's kind of in there in the handouts, and it's the only handout we have today. And you need to send that evaluation sheet into the email address on the sheet. If you do all those 3 things, and of course we exceed the time that's required, which is 50 minutes, then you will get 1 CPE credit. So also, we love giving these credits to you, but you do need to follow the rules. So let's start off with the polling question number 1. So, you know, the 3 of us are wrestling fans, and some of us have been to more WrestleManias than others. But the question is, which of our panelists' favorite professional wrestler is Stone Cold Stephen Austin? Is it Steve? Is it Josh? Is it Todd? Or is it all of the above? So which of the panelists actually loves Stone Cold Stephen Austin? You can start your poll right now. And yes, start answering those questions so that we can make sure that you get your CPE. Looking at the results, very interesting results here. wasn't what I thought. We'll give you a few more seconds before we do the countdown. Okay. Countdown 5, 4, 3, 2, 1. All right. It looks like most people said it was Josh, and you're wrong. Let's turn to the slide of our panelists. And you can see there it was Steve. I guess Josh really likes Ric Flair, and I like Andre the Giant because he's much bigger than me. I don't know why the mouth is open for Rick, though, but we could talk about that some other time. Today's agenda. So, yes, we're bringing you the introduction right now. We have some updates, which we want to share with you. The wonderful SBA did send out yet a new SBA interim final rule. I don't know why they call it a final rule if it's interim, so I think they should just add the word interim instead of final and say interim, 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 interim. We're going to talk again about the PPP loan forgiveness, about the application forms, and something that's really confusing, folks, the FTE exceptions. We're going to go through different scenarios to help you out there. And then we put a new section in called Yes, You Can, No, You Can't. This is based upon your frequently asked questions that you submit to us. Yes, you can, and no, you can't. I get the privilege of starting with the updates. Okay, so what's new? So we learned this week that the SBA and the Treasury is going to publish certain data for the PPP loans that are greater than $150,000. Thanks, guys, for using that number. They're going to publish the business name and type, address, and the zip code so that people can send their postcards to you, the NAICS code, demographic data, not-for-profit information, job supported, and loan amounts. Categories below account for 75% of the loan dollars approved, 150K to 350K, 350K to 1 million, 1 million to 2 million, 2 million to 5 million, and the 5 million to 10 million. So they're going to publish all that information. Now, for the PPP loans that are under $150,000, it says that the SBA will release totals aggregated by zip code, by industry, by business type, and by various demographic categories. So your information will be out there. Thank you, SBA and Treasury. Also, we learned, again, very clearly, the deadline to receive funding is June 30th, 2020. So folks, this will be the last time we tell you this. The SBA has revived the Lender Match online tool, assist unserved, I want to say undeserved, but it should be underserved and disadvantaged small businesses to connect with PPP lenders. And the borrowers should receive an email from lenders match with them in less than 2 business days. And that is the link. Folks, you only have a few more days to apply for this. And I think there is, and someone can correct me if you'd like to, I think there's at least $100 billion still left, and you have very little time. So if you haven't applied and you want to apply, please click through that link as soon as we end the webinar, because you don't have that much time. Okay, let's do poll number 2. So we're talking about the S2 Solutions, which is also one of our partners, our technology partners. The cost of utilizing the services of S2 Solutions for all, and I'm going to underscore all, your technology will be equal to hiring a full-time equivalent employee, or is it higher than hiring a full-time employee, or is it far less than hiring a full-time employee? Poll is open, so start your polling. Is it equal to hiring a full-time employee higher than hiring a full-time employee, or far less than hiring a full-time employee? And this is what gives you access to, I believe the number is 68 IT professionals when you use the services of S2 Solutions. Is it equal to hiring a full-time employee higher than hiring a full-time employee, or far less than hiring a full-time employee? Okay, we are going to the answers, and people said far less than hiring a full-time employee. Actually, the answer is that it's never higher than a full-time employee. So I would probably say it actually is equal to hiring a full-time employee, or less than hiring a full-time employee. So most of you got the answer right. I'm not sure which way to go, but I'm going to stick with equal to hiring a full-time employee. Never higher than that. So that's poll question number 2. I'm going to turn over to my friend Stephen, who is our PPP resident expert on the new SBA Interim Final Rule. Finally, Stephen.
Thank you, Todd. Hope everyone is doing well. This is our last webinar of June. Hard to believe we're at the end of June already, but good news is that we'll be continuing to do these, so stay tuned. In any event, there was another interim final rule issued earlier this week on revisions to loan forgiveness interim rule and SBA loan review procedures. And this interim final rule contained a lot of new information, as well as clarifications of existing rules. And we will be sending out a more detailed e-blast on the interim final rule that is subject to these slides. But before that, we just wanted to go through what was covered. So the new information, and something here that has been a question a number of borrowers have raised, is that borrowers can apply for forgiveness at any time on or before the maturity of the loan date, which means you're not required to wait for the close of the covered period to apply. Now that the covered period has been expanded for borrowers from 8 to 24 weeks, that was a common concern. A lot of people asking, well, do I have to wait to the end of the covered period to apply? Now we've been informed that you, in fact, do not have to wait, and you can even apply for forgiveness after you've begun loan payments. So theoretically, if you have a 5-year loan, you could even apply for forgiveness right before your final maturity or your final payment. So that certainly gives borrowers a large window to apply for forgiveness. However, one of the caveats, and we do have an example on the following slide, if the application is submitted prior to the close of the covered period, you must account for any 25% salary wage reduction for the full covered period, be it 8 or 24 weeks. And I think this example, which is directly from the interim final rule, is very informative. So let's just walk through it. In this example, the borrower has selected a 24-week covered period. They reduced a full-time employee's weekly salary from $1,000 to $700, which accounts for a 30% reduction. But the employee continued to work on a full-time basis. So there was no reduction of hours, anything like that. It's strictly a reduction in pay. The first $250, i.e. 25% of the $1,000, is exempted and does not negatively impact your loan forgiveness amount. But the remaining $50, i.e. basically the difference between the 35% and the 30% and the 25%, is subject to a loan forgiveness reduction. And you carry that out and you say, all right, I have $50 reduction. I multiply that by 24, I come to an amount of $1,200. And irrespective of when you apply, you still have to carry this out for the full period. So had the borrower in this example used an 8-week period, they would multiply the 50 times the 80, have a reduction of $400. So a common question that has arisen as to why would somebody choose the 8-week period? Here's one reason. There are others as well, but here's one piece of information that's been clarified for us. Josh later on is going to go through some of the exemptions associated with rehire. So we can keep that in mind as well. But that's something to make note of. This is some other information. It's half new, half clarified, I would say. This was a question we had raised last week, in that different entity types, the owners of these entity types are afforded different benefits in terms of what's included in payroll costs. So first and foremost, we have C corporation owner employees, where they're allowed to include both retirement and health insurance in the payroll cost. But S corporation employees are only allowed to include retirement contributions on the theory that health insurance contributions are already included in their income. Now, what happens to less than 2% shareholders? But that's not, I guess it's not covered, but the rule says S corporation shareholder or owner employees, employer contributions are included, but health insurance is not. Schedule C or Schedule F filers are limited to just the cash compensation, which we saw was either the 15,385 or the 2833, depending upon the 8 or 24-week covered period. And then general partners are limited to the 2019 net earnings from self-employment, reduced by the amounts here, and then multiplied by 0.9235, which is basically the self-employment component of it. So just as a reminder, general partners, Schedule C filers, and Schedule F filers do not include retirement health insurance benefits in the forgiveness request. So just something to keep in mind when you're going through your applications. The timeline for application in terms of when the SBA will render its decision was clarified as well. And again, the lender has 60 days from the receipt of the application to render its loan forgiveness decision to the SBA. And provided the lender, the banker, has determined that a full or partial loan forgiveness is in order, the SBA then has 90 days to remit the appropriate forgiveness amount to the lender. And as a reminder, if anybody took a idle advance, and this was the $10,000, up to $10,000 that was available, depending upon how many employees you had, this will be deducted from the ultimate amount that you received forgiveness for. So keep that in mind as well for those recipients of the idle. And just as a reminder, the idle program is still open, and it was open for more than just agricultural businesses. So just keep that in mind as well, just a side note there. And the lenders are responsible to inform the borrowers of the loan forgiveness decision made by the SBA. Then the unforgiven portion requires the payment. And this is either the 2-year or up to 5-year loan amortization period, depending upon when you received your loan and or if you've negotiated a longer period with your bank. And as a reminder, this timeline applies only to forgiveness applications that are not reviewed by the SBA prior to the lender's decision on the forgiveness. So there was an interim final rule, another one I've lost count at this point as to how many there are, but there was one specifically issued about SBA loan review procedures and borrower and lender responsibility. So you want to refresh yourself on those as well if you think this will impact you. And again, as Todd mentioned, we're happy to discuss this with you. So this is an area that's received a lot of concern, a lot of question. It's the rehire exceptions. And the amendments to the CARES Act, be it with FAQs or with interim final rules or with the PPP Flexibility Act, there are a number of options for borrowers to avoid negative forgiveness implications. The employees terminated for cause, voluntarily resign, or voluntarily requested and received a reduction in hours. And you say, well, why did you cross out the termination for cause? Well, we'll get to that in a moment, but just keep in mind, at least for a second, that just strictly terminating employees for cause does not appear any longer to give you an exception. But before we get to that, let's just talk about the 2 new exceptions that were placed into law when the PPP Flexibility Act of 2020 was added. And we're going to touch upon this on a number of different points throughout the slide, but borrowers who attempt but are unable to rehire employees who were employed as of February 15th, and also unable to rehire similarly qualified employees for unfulfilled positions by December 31st of this year, there is a way to avoid negative forgiveness implications as well. And borrowers who are unable to return to pre-February 15th levels due to these COVID-19 related standards, be it for sanitation, social distancing, or really any other related worker or customer service requirements. Now they've kind of expanded on that as to what a governmentally established requirement is, and that it's direct and indirect implications. So the goal here, I think, is that they're really trying to make borrowers who were loan eligible to be able to receive full forgiveness, be it you meet the qualifying standards and payroll exceptions, the 60-40 split and whatnot. But as I had previously mentioned, borrowers should note that the rehire exemption surrounding rejected rehire opportunities has been replaced. Basically, as we were saying, strictly terminating employees for cause without any attempt to rehire them or rehire for similarly qualified positions. You're not going to escape negative forgiveness implications. So something to keep in mind there as well. Perhaps we'll see some additional clarity, but for now, they've specifically said that essentially the PPP Flexibility Act, this exemption number 1 here, that's the rule going forward. All right, and as we always have said, documentation of these rehire exemptions is extremely important. It's required, critical, any way you want to look at it, but you have to have written documentation, be it to rehire the employee, record of the rejection, and written records of the efforts to hire a similarly qualified employee. And if you're claiming a second exemption surrounding COVID requirements, you need the copies of applicable requirements or guidance for each business location. And you're really going to want to document this because, again, this is going to be an area that the SBA, if they happen to review your loan, could really look into. So you want to document that, and then perhaps relevant financial records to reflect this as well. And in certain instances, borrowers are going to be required to inform state unemployment agencies of the individual's rejection of the offer of employment. They're going to publish guidance on their website as to how to do this because it obviously depends upon the state that you're in. So something that's important to keep in mind as well. Just a few more items before we get to our next polling question. Nothing really new here, but the cash compensation for owners limited depending upon the 8 or 24 week period to $15,385 or $2,833. This is just a cash piece, on top of it, any non-cash benefits, which we discussed in the prior slide are there as well. The paid and incurred standard, which has been a common theme that is kind of just restated as well. And again, payroll costs and non-payroll costs have different standards. We see payroll costs are considered paid when the paychecks are distributed and or when the ACH credit transactions are originated, whereas incurred is basically when the pay is earned by the employee. Non-payroll costs stayed paid, non-payroll costs incurred, basically accrued during the covered period and paid on or before the next billing date. So there is leeway there, and because borrowers are now getting a 24-week period, there seems to be more maneuverability in terms of how you're going to get to that 60-40 spend. And lastly, the lender process for loan forgiveness, which just talks about the documentation that the lenders will need to gather from the borrowers about loan computations, loan forgiveness amounts, other payroll costs, and whatnot. That's restated as well. Not a lot of new information here, but certainly something you as lenders are going to want to keep in mind. And with that, I will turn it over to Josh to talk about loan forgiveness. Josh.
Thanks, Mr. Steve. Good morning, everybody. So just wanted to take a quick second here. We're starting to get a lot of questions, a lot of comments around my 8 weeks are up. I'm ready to move forward. How do I move forward? And I think if we're learning anything, and as we've learned anything, looking back over over the last 3 months is, when you think you have everything under control, then things change. So I will say, I think I can comfortably say the next two things. The first is that unless you, in your heart and in your books, know that you have not terminated anybody, you have not reduced anybody's salary, you've really maintained all of your payroll costs throughout, and you've satisfied the non-payroll piece component, and you meet the requirements for Form 3508EZ, that's when you apply for forgiveness. Otherwise, I think really to rush to the gate, could certainly create problems for you down the road. And on top of that as well, we've had some folks reach out and say, hey, I submitted my application to the bank. The bank basically said they don't know what to do with it. From what I've seen and from conversations I've had, the banks are not ready to start processing these applications. So kind of sit tight and, see what happens. But again, so the SBA did release Form 3508, that's the long form, and Form 3508EZ, the short form. Who were the borrowers who were eligible for Form 3508EZ? So again, you need to meet one of the following three criteria. The first is you're a self-employed individual, independent contractor, or sole proprietor who had no employees at the time of PPP loan application. And actually, I just want to take a pause for a second. If there are, and I know from time to time we do get some bankers on these calls. If you're still accepting applications and you can actually have a conversation with somebody who's a self-employed or independent contractor or sole proprietor, we're still getting inquiries on folks trying to apply online and they're just, for whatever reason, unable to do it. So if you're out there and you can help, please let us know, because we do have people who are in a crunch who could really use your help. So you're either number one or number two. As we said before, you did not reduce the salaries of any employees earning less than $100,000 annualized by more than the 25% when comparing the covered period to Q1 2020, and the borrower did not reduce the number of employees or the average paid hours of employees between January 1st, 2020 and the end of the covered period. So again, if everything stayed exactly the same, then you're good. Just a note here too, that the reductions, attributable to the borrower's inability to rehire personnel employed on February 15, 2020 and refill those positions with similarly qualified employees on or before December 31st, 2020, as well as situations where job offers to restore hours were rejected, may be ignored, or again, if the borrower did not reduce the salaries of any employee earning less than $100,000 annualized by more than 25% when comparing the covered period to Q1 2020, and the borrower was unable to operate during the covered period at the same level of business activity as before February 15, 2020. As Steve mentioned before, these are, the COVID-19 issues. And the borrowers who do not meet either point 1, 2, or 3, strap in and hold on for the ride, because we expect there to be a lot more changes as we get into it. So again, just wanted to go over the criteria for the easy form. Okay, another important question. If you remember back last week, we went through the calendar and we talked about different dates. We're still getting a tremendous amount of questions regarding FTE headcount. So we want to lay out the FTE periods again, which when you sit down with all your schedules and your applications, these are the FTE counts that you want to have at your disposal. So the first is the FTEs from February 15, 2019 to June 30th, 2019. The FTEs from January 1st, 2020 to February 29th, 2020. Remember, we need those If we are a non-seasonal employer, we're going to want to compare both those periods to the covered period, and obviously see which gives us the best result. If you are a seasonal employer, you want to have your FTEs for any consecutive 12-week period from May 1st, 2019 to September 15th, 2019. You're going to want to have your FTEs during the 8-week or 24-week covered period. You also want to have your FTE count as of February 15th, 2020. There is no more requirement for June 30th, so we have put that in and crossed that out. You're going to want to have your FTEs as of the application date, and the FTEs at December 31st, 2020. We're going to talk about in a little bit, some scenarios that have come up, but again, with December 31st really being the date for a lot of measurement, it is very possible that even though you may have spent the money well in advance of that date, there's a lot of you out there who may very well be waiting for December 31st. Okay, so how do you count FTEs? So for each employee, you want to accumulate the average number of hours paid per week. We're going to divide this total by 40 and round to the nearest 1/10, right? So the maximum FTE you can have is a 1.0. The guidance also allows for a simplified method, and that is basically a 1.0 for employees who work, at least 40 hours a week, and 0.5 for everybody else. So again, the option exists to calculate it both ways. You certainly want to look at it both ways to see which gives you the best result. How does the FTE headcount reduction and the 25% salary reduction interact? So the SBA Interim Final Rule on May 22nd clarified that the 25% wage reduction only applies in situations not attributable to FTE headcount reductions. So you can't be dinged twice, and I think that's the most important thing to take away here. So let's kind of walk through an example that's in the guidance here. So we have an hourly wage employee who had been working 40 hours per week during the borrower's selected reference period. So that would give you an FTE of 1.0. The borrower reduced the employee's hours to 20 hours per week during the covered period. So because our hours worked reduced our head count from 1.0 down to 0.5, and there was no change to the employee's hourly wage during the covered period. Because the hourly wage did not change, we look at the reduction in the FTE. So that's how it would be reported on the application. Okay, so we're going to move on to some scenarios that people have raised, also based on some internal discussions that we've had. We're going to go through each scenario, and then we're going to give a take as to, based on the guidance that's out there now, where we believe we're at, certainly subject to change. There could very well be built into this some legal issues related to employees. So if in your company, maybe you meet one of these scenarios, but there, could be some oddballs out there with respect to employees, whether you're dealing with medical leave, disability, things of that nature, you may want to also have a discussion with your attorney. So scenario number one, the company discontinues a business segment, terminating all employees before the end of February 2020. So there's two ways to look at this, right? In terms of how does it affect my headcount? How does it potentially affect my salary reduction? So if the discontinuing of the business segment was the result of a COVID-19 related issue, and Steve had mentioned those before, whether that be, a significant reduction of business activity or for health related concerns, then it shouldn't be it shouldn't really be an issue in terms of forgiveness. However, if it can be determined that this was in the works prior to COVID, then it may be difficult to support the COVID-19 description, right? And again, it all depends on the documentation that's required to be provided to the bank and ultimately to the SBA. So if you are in that position, I think you need to really take a good hard look as to whether or not you discontinued the business segment purely for business purposes and this was in the works, or if this was a direct result of COVID-19. The second scenario, how do furloughed employees impact FTE headcount and or salary reduction? So from an FTE standpoint, it doesn't particularly affect the headcount if the employee is restored by December 31st. There's still some opinion out there that the restoration date could also be as of the date the forgiveness application if the forgiveness application is filed prior to that date. That's one of the areas I think we're still waiting for a little more clarity. In terms of salary reduction, it could be affected when you bring them back, if you bring them back at a reduced amount. So keep that in the back of your mind. Seasonal business, such as a summer camp, unable to open. However, certain employees are still receiving paychecks. So with respect to a seasonal business, can you meet one of the exceptions from the earlier slides with respect to the COVID-19 effects on the business? You could still certainly be eligible for forgiveness based upon the money that's been spent. Okay, on April 1st, 2020, low performing employees were terminated. These positions were not replaced, and there was no attempt to rehire the previously terminated employees. So unless the terminations were COVID related, you will have a reduction in your FTE count. Next scenario. 3 employees were terminated shortly before the receipt of PPP funding. Subsequently, their job responsibilities were reassigned to other people within the organization. So, assuming the business activity remains the same and you have not made an attempt to rehire similarly qualified people, then you could experience a reduced headcount if the current employees who took on this additional responsibility were already at an FTE of 1. And you could also wind up not getting all of the loan forgiven if these new responsibilities given to these current employees, and if these current employees were already over the $100,000 threshold and there would be no additional payroll to allocate to them, it could hurt you from that capacity as well. Okay, medical practice closed on March 15, 2020, but is now opening up. Operations are expected to resume through September at 25 to 50% of the normal operating capacity. The employees are working 50% of the normal hours, but the salaried hourly amounts are 100% of the normal pay rates. So no impact, right? They're getting the normal pay rates. However, is it any different if they were getting 70% or 80% of the normal pay rate? So if they're at 80%, it's okay because we're still over that 75% threshold. However, if it drops to 70%, then we know that we have a salary reduction there that we're going to have to account for when we do our forgiveness application. And the last scenario, so we have a law firm operating throughout the COVID-19 pandemic, but all professionals are working remotely. 2 professionals resigned once the office was reopened, citing no desire to return to an office environment. And based on that scenario, we believe there's no impact because the employees voluntarily resigned. So those were some scenarios that came up. Please, again, if you have an interesting scenario in your business, send it on through, and we'll continue to address that. So I'm going to turn it back to Todd for poll question number 3.
Thanks, Josh. Exciting poll questions. Okay, this one is on our Sachs Wealth Advisors. What was Sachs Wealth Advisors' recent ranking on Accounting Today's list of the top 150 firms by AUM? Was it 150? Was it 92? Was it 46, 29, or 3? We're opening the poll right now for you to respond. And yes, this was just published not too long ago by Accounting Today's list of top 150 firms by assets under management. Sachs Wealth is the folks that bring you all those services of managing wealth, both 401ks, 403bs, everything you could possibly think of. So poll is still going on a little bit longer. We're going to hold it a little bit longer because not everyone has voted, and seeing that you need to answer 3 of the 4, we don't want you to miss out on getting that wonderful CPE that you need before the deadline this year. So going to hold out a little bit longer. Is it 150, 92, 46, 29, or 3? So 5, 4, 3, 2, 1. Let's see the response. Okay, 4% said 150, 22% 92, 21% 46, 36% said 29, and 18% said 3. Looks like the folks, 36% of you actually read the article, and yes, Sachs Wealth Advisors is ranked 29 of the top 100 firms by AUM. Okay, we're going into a new area. We'll actually staying in this area on the PPP loan forgiveness open questions. Josh, could you take it away for us?
Yeah, sure can. So just to kind of refresh, as we know, we try to put these questions out there every week and answer the ones that we've now have been satisfied. So again, just to kind of recap what's still open. 1, how does the paid incurred standard impact retirement benefit forgiveness? Still not 100% sure there. We're still waiting on whether or not the expenses will be deductible for tax purposes, right? So to this point, we know that for federal purposes, the loan itself will not be taxable. However, the expenses incurred, which ultimately resulted in that loan forgiveness as it stands right now, are not deductible. So we're hoping that they change their course on that, but no final decision has been made yet. We're still not sure from a state perspective how they will treat the forgiven funds. Perhaps they could just be waiting to see, what the federal government ultimately decides to do and then make a decision there. There still is no indication to this point as to whether or not they will expand eligible costs for forgiveness with respect to your non-payroll costs. Keep getting a lot of questions on our end about, people spending a lot of money on PPE and, having to redo their spaces to accommodate better social distancing and things of that nature. As of right now, those expenditures are not included in the calculation. We're still not 100% certain as to the definition of a transportation utility. So hopefully we'll get some clarity there. We don't know at this point if there will be a separate application for seasonal employers. All indications look like there will not be. How does the December 31st, 2020 rehire date impact borrowers who want to apply for forgiveness prior to this date, actually had a really good conversation with the task force about this before we jumped on the webinar today. And I mentioned it before, I really think that we're going to see a lot of people waiting until December 31st to make a decision about submitting that application. We're still waiting for new guidance to be released by the SBA. We've heard anywhere from 25 to 30 FAQs. Additional FAQs are coming out. They were supposed to be out, 2 weeks ago when the initial application came out. So we're still waiting for that. Hopefully that will come soon. Are the owners of multiple entities allowed to claim compensation for each entity? Steve mentioned about the caps before with respect to owner compensation. We don't know, how many times you'll be able to include that compensation, though, where you have multiple entities. You have some companies who applied with all their affiliations under one loan application, and you have some which filed individually. So we'll have to still wait and see. And always the important question to ask is, how many more times will this application change prior to being submitted? So we're trying out something new today. Again, in response to a lot of questions that have come through, try to make it simple with not a lot of explanation, but yes, you can, no, you can't. So yes, you can spend 100% of the loan on payroll. Yes, you can apply for forgiveness before the 24 weeks is up. Yes, you can use the money for both real and personal property rent and mortgage interest, right? So if you have interest related to building facilities or for vehicles, for equipment, that is okay. Yes, you can receive both the EIDL and or the Main Street loans in addition to your PPP loans. So if those are avenues that you believe you need to provide the necessary liquidity for your business, apply. Yes, you can still apply for the EIDL loan. Yes, you can be audited by the SBA even if you have a loan below $2 million. Remember, document, document, document. And yes, you can expect additional changes to the rules. Okay. No, you can't. No, you can't use a line of credit interest as a forgivable expense. It is a permissible use of funds, but not a forgivable expense. No, you can't use liability insurance or workers' compensation insurance costs as part of your payroll costs. No, you can't apply for additional funding if you've already received a PPP loan. Gotten a lot of calls that said, well, my PPP loan, only covers 8 weeks, but now it's been expanded to 24 weeks. Can I get more money? The answer is no. No, you can't receive funding after June 30th, 2020. We talked about the end of the application period before. So again, just to reiterate one more time, if you have not gotten your application in and you want to partake, get it in ASAP. No, you can't spend more than 40% of the loan on non-payroll costs. No, you can't exceed $100,000 annualized for compensation. And no, you can't submit your loan forgiveness application because the banks are not ready to process them at this time. So hold those tight. And with that, I'm going to turn it back to Todd for the fourth and final polling question.
Yeah, so this is an exciting polling question. We've combined a few polling questions from the past, and we're doing this because, believe it or not, we get a lot of questions on this. How do I obtain CPE credit for this webinar? 1, complete the evaluation form that's under the handouts. Look at your screen, see under the handouts, it's there. or email eval to the address on the form, or answer 3 out of the 4 polling questions, or stay engaged, which means you don't leave your computer and go play video games. Stay engaged throughout the entire webinar, or all of the above. The poll is now open. Start your voting. Hopefully, this poll will take seconds to do, because this is, I think, the 4th webinar that we've asked the same polling question, so that you would know exactly how you could get your CPE. Okay. Few more seconds, because not everyone has voted, and I want you to be able to get your CPE, because remember, you have to answer 3 out of the 4 polling questions. All right, countdown. 5, 4, 3, 2, 1, and the answer is, all right, almost all of you got it right. It's all of the above. For those of you who selected anything but all of the above, please note, if you don't care about CPE, you don't need to know the answer to this, but if you do, you have to complete all of the above. So let's go to our last slide. So our last slide is basically where we say goodbye to you. We want you to know that we do have an upcoming webinar that is going to be on July 2nd. Yes, we're not going to cancel next week's, because if I know the SBA, they will probably release everything on the weekend again. So also, there's a bunch of major resources that are in our COVID-19 Resource Center that can be found on the sacsllp.com. And you can register for webinars and also for all ongoing information and resources. If you have questions, folks, feel free to email us at covid19@sacsllp.com. And yes, we should probably put this in our future. Yes, you can. Yes, you can expect to get the slides and the video after the webinar if you registered for it. So again, like to thank you from Saks LLP, from S2 Solutions, and Saks Wealth Advisors. Stay tuned for next week, when we will be bringing you an update, and hopefully we'll get some more of those FAQs answered, but appreciate it. And yes, we made the 50-minute mark, so you will get the CPE of 1 credit. So stay safe, stay well, and wishing you all the best on this beautiful day. Take care.